Joining me right now to talk about all about that is Tengler Wealth Management Chief Investment Strategist, Nancy Tengler. Nancy, it's good to see you this morning.
You too, Maria.
Thanks so much for joining us. How important is the Fed this afternoon, do you think, in terms of the direction for markets next?
Yeah, I think there's a definite negative upside surprise when people read through the minutes and think, hey, maybe there is another rate hike on the table for 2019. We think there is. The market doesn't seem to think there is. The market thinks that the Fed is done. And then the balance sheet wind down, that's kind of in the price, in pricing. So I don't see that as a big surprise.
So you think that the economy maybe is a little stronger than people are making it out to be, because the Fed gave us that pivot and then suggested that there would be only one rate hike this year.
Yeah, so we're basing this on our view that China is going to be stronger than people expect in the second half of this year. There have been over 60 easings. We've seen not just monetary stimulus from Beijing, but fiscal stimulus, reserve requirements at banks have been reduced. So we think they're going to do whatever they have to do to get the consumer back in the game.
All right, so then the Chinese economy obviously is going to have ripple effects across the world. Yeah. What about earnings? I mean, we are expecting a slowdown in terms of earnings this year, pretty dramatic from last year. I know you had the stimulus at the back of the earnings story last year.
So two things about that. We've been writing about the consumer. I've been on air with you, and we've talked about retail and our expectations that would be a great place to be. The consumer is going to get about another, tax-paying consumer is going to get about another $184 billion in revenues, or in non-tax payments, lower tax payments. So we expect to see that trickle through to the retailers and the consumer discretionary group. We'd written a piece that we thought retail sales on Sunday that number was going to be reversed. Watch Walmart and Costco, and then you saw what happened with Walmart yesterday. So we don't think earnings are stuck here. And if you look based on history, companies with higher foreign earnings are doing better this year than those with lower. And that means stocks are sniffing out, I think, a global recovery. It's going to be volatile. It will, earnings are slowing down, but we think there's more upside surprise.
You make a really good point, because the retail sales number was so weak, and it was a real surprise for a lot of people. And then we get the Walmart numbers out yesterday, which actually looked very strong.
Outstanding.
And that could have been more indicative of what's going on. How do you want to allocate capital, having said all that?
So I want to be less exposed to developed Europe. I think China's interesting, but we are focused on large cap, just multinational, big companies here in the U.S. We think quality is where you want to go. That's been a theme. We've been able to use that to our advantage against the market.
The market had the best January in 30 years. Are people getting complacent at this point? You would enter right here if
I would be careful
because of valuations.
Absolutely. I mean, we're phasing money in. I think we got the chance to buy some really high quality companies in December. Morgan Stanley at lower valuations, Salesforce.com, Broadcom we added to holdings, and so we're just waiting. Actually, we added to CVS, just initiated a position, and Tiffany. So we're looking for opportunities, but we're not full barrel going in with both fists.
All right, we'll leave it there. Nancy, it's great to see you.
Thank you.
Thanks so much. Nancy Tengler there this morning.